Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Friday, 14th November, London Open. Here are the key themes shaping the start. The UK is back in focus after reports the government will drop planned income tax hikes, weighing on sterling and stoking fiscal concern. And the broader risk mood is fragile after heavy selling, even as the US dollar softens and safe haven metals and oil catch a bid. The UK story is front and center. The Financial Times reports Prime Minister Keir Starmer and Chancellor Rachel Reeves are set to abandon income tax hikes ahead of the 26 November budget. Markets read that as a hit to fiscal credibility, and it's showing up quickly, with sterling lower and euro sterling pushing to a 2.5-year high around 0.885. Traders are also flagging pressure on UK government bonds at the open, with yields seen pushing higher. For now, politics and the budget math are overriding the recent resilience in the pound. Meanwhile, the global tone is uneasy after a sharp equity sell-off yesterday. Bitcoin has slipped to roughly 97,600, threatening a sustained break below that 100,000 line that's been a psychological anchor. US futures are steadier, but caution lingers as investors reassess the rate path and incoming data. The dollar is softer on balance. Even as some traders trim the most dovish bets, that's helping gold reclaim the 4,200 mark and lifting silver back above 52.50 as demand for hedges firms up. Energy is moving on geopolitics. Oil jumped after a Ukrainian drone strike on Russia's Novorossiysk port, one of its key export hubs, reviving supply risk in what had been a bearish market. At last check, West Texas Intermediate was near 59.6 and Brent around 63.9. For traders, that matters because the move feeds directly into commodity-sensitive currencies and inflation expectations. In Asia, China's data painted a mixed picture. Retail sales and industrial output showed growth but missed some forecasts, while the property downturn deepened. Even so, the People's Bank of China set the yuan fix at its strongest since late 2024, and the Australian dollar firmed on the day as China-linked sentiment improved. The New Zealand dollar outperformed as well, helped by a jump in manufacturing activity and the Reserve Bank of New Zealand's plan to ease mortgage loan-to-value limits. In Europe, a cautious tone from the European Central Bank has underpinned the euro across the crosses, with euro-yen setting a fresh record high. Turning to market and sector focus, the UK fiscal turn is supportive for euro-sterling and a headwind for cable. While higher oil prices lend the Canadian dollar some support, softer dollar tone and data uncertainty are propping up gold and silver, and the yen is a touch firmer, though it remains near recent lows. Crypto weakness is an overhang for risk appetite more broadly. Looking ahead, it's a relatively quiet calendar, but keep an eye on Eurozone growth figures and US releases later in the day, plus any fresh guidance from UK policymakers as budget plans evolve. Oil headlines around the Black Sea will stay in play. I'll be watching euro against sterling, looking for that uptrend to hold if UK fiscal worries persist. I'm also watching pound dollar for a downside bias into the weekend. With oil firmer, dollar Canada could stay heavy, and I'll look for Australian dollar, US dollar to grind higher if China tone remains supportive. Gold in dollar terms has regained momentum, while euro-yen is extended. So any pause in that rally will be telling for broader risk. The takeaway, in short, politics and geopolitics are steering the morning, while risk appetite is cautious and selective. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.